Good morning. Comment Tel-Aviv, how are you? Alrighty. Guess we got to get going. Boom, 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 boom. Alrighty then. Hey, welcome to Forex.Today, the YouTube community of more than 21, almost 22,000 foreign exchange traders. We gather here today to conduct technical analysis using, well, the Traders Way MT4 platform, and fundamental analysis using the TRADARS analytical platform, with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's go! Never mad at the fact he's corrupt like a senator. Soul in a rope, but you treat it like soap on a rope because my beats and my lines are so dope. Hey, good morning. Hey, we got a lot going on in the world. Hey, maybe peace in the Middle East. Hey, maybe not peace in the Middle East. Things are up, things are down, things are sideways. Yeah, well, welcome to the world of trading. My name is Wayne. Doing this a long time. This ain't my first war. So oil's down today. Gold is up. Bitcoin's up. VIX is down. Nice. Could be worse. Well, it has been worse. So maybe not a terrible trading day today. Maybe seasonality is kicking in, but I don't know. I think we're still going to be very much headline driven. So again, we're going to use TRADARS, get it? Radars for traders. We're going to use TRADARS to do some economic, and in this case, we're going to analyze the market and see what the market conditions are, because you should be aligned up with actual market conditions. We're going to use Trader's Way for the execution and trading platform, which I've been using for, 12 years. And I got some ideas on how to integrate TRADARS into the Trader's Way MT4, MT5 platforms. Wouldn't that be cool if some or much or even all of TRADARS analytics was inside the trading platform? So you can go lip, lip. Oh. So anyways, get involved. Life is good. Life is great. Life is beautiful. Life is precious. So peace to everyone. And I hope everyone is safe. I got a poll going here. Are you okay with moving the live stream, the YouTube live stream, earlier in the day? Let me know. If that's okay with you, if that's good for you. If you're watching a recording, leave it in the comments, because I want this to be good for us. Cool. And then the private live streams for TRADARS subscribers will be at the end of the trading day to cover big macro stuff, review charts, discuss maybe tomorrow, the rest of the week, the rest of the month, the rest of the quarter. And then even after that, the discussion is having Coach Maida lead an Asian fade trade session at the Asia Open. So really, at some point, it'd be like the YouTube live stream in the morning, and then mid-morning to noon, there'd be a coaching session inside of TRADARS, depending on the coach's availability. And then me at the end of the trading day, and then Maida in Asia. So that's 1, 2, 3, 4 opportunities for live coaching via YouTube, but also inside of the coaching team of TRADARS.com. What do you think? That's a lot. Yeah. Anyways, let's log in. Here's TRADARS. You can start for free. No credit card required. I'm going to log in. Boom! Not bad. Then I log in to the analytics platform. Bada bing, bada boom. Cool. Good morning, I'm Aiden. Let's get you up to speed on the current macro landscape. We are navigating a definitive risk-off environment as the market digests a notable compression in Treasury yields, with the U.S. 10-year yield retreating 5.0 basis points to 4.342%. Investors are rotating towards safety, exerting significant downward pressure on high beta commodity currencies like the AUD and NZD. Biggest movers right now, U.S. oil and volatility index are down. Silver, gold, and Nikkei 225 are up. Cool. And the reason this doesn't quite match that, they're close but not exact, it's because this gets written once an hour. So at that point, right? So yields are down. That's good. Stock market is up. That's good. VIX is down. That's good. Bitcoin is up, that's good. Gold is up, that's good. And oil's down is good. And dollar's weak, that's good. So things are improving. Up, okay? Up 1.23 from yesterday. This is overall, but look, we're tickling some good news here. What do you think about that? Does that smell good? Yeah, not so bad. This looks redundant, right? I'm not sure why he's using that thumbnail. He's not supposed to use that thumbnail. But this is where we are now. So when we're done this live stream, this will update. Yeah. This is tomorrow's, but he's using the wrong thumbnail. So they are different. This is the YouTube one. This is from our internal coaching training section. All right, let's get an update on the headline radar. What is going on in the world right now? Knock. Norges Bank seen on hold at 4.00%. TD Securities.
Hezbollah chief rejects talks with Israel under fire, vows fighters will continue without limits.
Bernstein sees 1970s-style supercycle for Middle East oil services.
Australian dollar, US dollar. Inflation risks curb downside for Aussie, BBH.
ECB hawkish shift with energy-driven inflation, ABN AMRO.
U.S. eyes swift Middle East return of minesweepers held up in Singapore, official says.
Iranian strikes pose existential threat, Gulf states tell UN. Bowie's green. I am more worried about higher inflation than slower demand from war. Green. Feeling green at the gills. We're an hour away from the EIA. EIA. It's in the game. Yeah. Energy Information Agency. Do we actually care about refinery utilization rates? Well, maybe we do. Are they ramping up for production or winding down? Okay, well, really what we care about is the inventory level. Yeah, all. Yeah, nothing else really going on of terrible note. Right? Nothing till Asia, then tomorrow, some data out of Kenyatta tomorrow, but okay. So this is one of the things that we're working on right now at TRADARS is improving.
Good morning, I'm Aiden. Let's get you up to.
Well, I'm trying to organize our flow. And I'll show you how cool this is, like the flow. You should see the things, you should log in. This is what you see immediately, as you know. You should take note. Hey, things are a lot less worse. In fact, there's a lot of goodness going on in the world. Okay? One of the biggest things right now, right? We have oil down. That's huge. We have gold up. That's huge. By the way, he's noted that. Look, U.S. oil and VIX are down. Ooh. Yeah. Gold is up. Ooh. Okay. So it tells you the biggest movers. And you can say, well, generally that's good, right? So what should you do if oil's down, gold is up, or VIX is down? Like, what should you do? And so I'm trying to think of how to get you here faster. VIX is down. Now, it's not as down as much as it was earlier today. So in the last hour or two, volatility has risen a little bit from 2 hours ago, but it's significantly lower than yesterday. Okay. How does VIX impact the dollar index, USD yen, 10-year yields, euro dollar? Okay, so on and so forth. How does it impact S&P 500, NASDAQ? This is what we're trying to get to, right? So this is what's happening. This is right now. Right now! VIX is down. What do I do? Well, S&P 500 has, right, inverse correlation. So when VIX is down, S&P 500 is up. So we're looking at a 4% move in the S&P 500. It was almost 5% a couple of hours ago. 5% up. Oh, okay. So you could then start analyzing what you want to do with the S&P 500. Greg says, what country is going to shut down first with no energy? Now, first of all, Straits of Hormuz only blocks 20% of the oil's energy, which means 80% is just as before. Second thing to address your question is all of that energy goes to Asia. Third, some oil is getting out. So it's less than 20% because some oil tankers are getting through the Strait of Hormuz. And on top of that, some other oil is getting out through pipelines that go around or bypass the Strait of Hormuz. Plus now some Russian oil, I believe, is available. Some Iranian oil is available. Some strategic petroleum reserve oil from the IEA is available. So it's really not 20 or 19 or 18 or, I don't know what the real change in flow, but let's say it's closer to 10 than 20. So now the world is only kind of constrained by 10% less supply. Meanwhile, we already have more than enough oil in supply. So we have 10% less, but we don't really need more. So it's mostly psychological, right? Yeah. Now, the longer we go, the bigger of a problem it gets. Yeah. Because you do whittle down what you have in supply, and then you do have needs. But right now, if you so as traders and investors, we look at WTI and Brent, right? WTI being U.S. oil, we look at Brent being international oil. Hey, guess what? There isn't such thing as Brent and WTI. There's all kinds of different, right? There's all kinds of U.S. oil. And there's Canadian oil. Well, the oil you get in southern Alberta is different from the oil you get in northern Alberta, which is different from Eagle Ford down in Texas. Okay. So there's that. And then you have oil from Nigeria, beautiful oil. Then you have oil, okay, in the Middle East. Now, what does that mean? Well, Iranian oil and, let's say Saudi Arabian oil. And then you have all the nat gas from like Qatar and Bahrain, right? And so now you're getting to okay, you have Omani and Qatari and Bahrainian and Saudi and UAE and Kuwaiti and Iraqi and Iranian oil, all coming out of that area. And where does that go? And that goes to Asia. And so those prices of all these, and by the way, like Saudi Arabia has probably 12 different types of oil. So again, there is no such thing as an oil price. Each one of these has its own price because some oil is good, like for making bitumen, like let's say heavy oil from Venezuela. It's tar, but light, beautiful, sweet crude coming out of Nigeria is different oil, and they're used for different products. The oil in the United States, in the Permian Basin, is very light and would be much different than oil from northern Alberta. More similar to oil out of southern Alberta, right? And so you can imagine, well, if northern and southern Alberta have radically different oil, then how about the oil in the Middle East, right? And so there's certain buyers of that certain oil that are mostly impacted, meaning that oil in the Middle East, and the type of oil. So you can't just say Saudi Arabian oil. Well, there's 10 or 12 different types of oil, and from that, different products can or cannot be made. And so therefore, the demand for that would be different. And then there's the idea of duration over time. Do you need the oil? Do you need that energy right now? Or can you wait 30 days? Can you wait 60 days? Can you wait 90 days? Can you wait 6 months? So we talked about this in TRADARS for about, a half an hour today. We went through this whole process. But there's just different types of demand on different time frames from different regions for different uses. And for those that need it right here, right now, they might actually be paying $200 a barrel. Yet WTI is $100. Okay, so why are countries limiting supplies and gas stations are empty? Well, there could be a couple of different things. That region might not have the oil. Well, that's not everybody. Or that region has the oil, but they don't have the refinery. So, like California has more people than Canada, but they shut down their last refinery because they believe it's bad for the environment, which is, well, it's true. Oil refineries are not good for the environment. But California doesn't have the ability to make their own gasoline anymore. So now they have to import all their gasoline for a region that has more people than the second largest country in the world. Okay? So now 25 million people in California, or 28 million people in California, don't have any gasoline. So they're going to run out of gas before Texas or Oklahoma or Georgia. They're just going to run out. And prices are going to be higher because they don't have the ability to get their own gasoline, so they have to rely on somebody else. But that's not necessarily, and this is what I mean, every location, every region, every country has different levels of supply and demand, and those prices are quite different. So, yes, so Greg, earlier this year, I think it's Valero or near Vallejo, which is funny. By the way, I went to Napa last year, and I drove right past this refinery, and I'm like, look, I'm saying to my wife, look, the heater treater, the vertical separator. She's like, I don't want to hear about it. I'm like, I know how this whole thing works, right? It's like driving past, a colony on Mars, right? When you drive past an oil refinery. And it was still functioning then. It's been there a long time. And they finally shut it down because it's so expensive to run it in California because of the regulations and the taxes that they actually can't turn a profit, even though the state desperately needs this facility. The state hates the oil company. So the oil company, after being there for 150 years, Greg, has closed their California corporation, opened it up in Texas. So they moved to Texas. Their headquarters are now in Texas. And that facility that's been making gasoline for California for generations, many generations, is now shut down. And so now we're in a oil and gasoline crisis, and California, well, is screwed. And well, yeah. So I don't know. That was a choice. I'm not saying it's right or wrong. That's for people in California to decide. They made that decision, and well, in this case, there might be some consequences to it. But they'll have clean air. They just because their cars won't run. Yeah, yeah. I'm not saying I love the idea of electric. Yeah, but anyways, we're not here to talk about that. What we're here to talk about is, the rationale here. So it is what it is. But I want to make sure that what because of what you hear in the media on TV like Bloomberg and CNBC, I'm not picking on them. They run fantastic programs, and they bring in guests, and their guests are usually generally smart, generally successful. That's great. But there's a very generalized, oversimplified level of knowledge from all these folks. I'm not saying I'm a genius, but I'm one step more informed, we'll say. Because you can't just say something simple like, because I hear it all the time 20 times a day, 50 times a day. 20% of the energy is not coming through the Strait of Hormuz. Well, 20% of the energy goes through the Strait of Hormuz. But we are not restricted by 20%. Also, when you look at Brent at 100, that's very interesting, especially for futures contracts, for hedging. But you may be Japan paying higher than that because you need, for some reason, Iraqi oil or Saudi oil or Bahrainian nat gas. And for whatever reason, so even Japan has different demands of different types of energy. And because of that changes those prices. Not that there's a futures contract to hedge, but then there's the energy is very localized. Europe does not pay the same nat gas as the United States, and even in the United States, nat gas in Oklahoma is not going to be the same as nat gas in Illinois or California. Okay. So I think what we're hearing now is generally true, generally acceptable in normal market conditions. The analysis is good enough, but I think right now the level of accuracy from reality is there's a spread right now that it's somewhat true, kind of true. But what it seems to me like when you hear 50 times a day, 20% of the world's energy goes through the Strait of Hormuz, and therefore global oil prices are up. Okay, that's generally true, but it's not incredibly accurate. And I think they're just quoting the last guest on CNBC. And probably a month ago, they didn't know what they're talking about now, which means they were not knowledgeable before. And what they have is a superficial knowledge now, which is dangerous. Okay? It's dangerous because it almost makes sense. So if you don't know, and then you see some expert on Bloomberg television tell you this information, you're like, well, that makes sense, and they're the experts, so I guess it's true. It's somewhat true. It's not inaccurate, but it's not accurate. So we got to be careful, is what I'm saying. Yeah. You should probably take our oil training course at investorbootcamp.com. Dude, it's incredible. Yeah. I mean, it's incredible. Yeah. I took an entire class at Harvard, an entire class on the energy complex. My professor had a PhD from Oxford teaching me at Harvard how to trade oil. Really more of the oil industry, right? But on top of that, she was Russian. So she had an intimate and professional knowledge, a localized knowledge of Russian oil and the Russian oil industry and the Russian oil sector, plus her PhD in energy from Oxford. Now she's got the European education, the Russian knowledge, and now she's at Harvard teaching me, and I got the whole perspective. And she was ridiculous because the amount of information was so much, it was ridiculous. It was the best, I think, class I took there, and it was also one of the most challenging because she expected you to read 1,000 pages a week. And what am I doing? Why am I mentioning this now? Well, in discussing our current situation, I'm bringing this knowledge to the table, and I put it into a 16-hour training course, so you could have pretty much my Harvard, Oxford, Russian knowledge of the global. Oh, and I'm Canadian. I have family in the a lot of family in the Alberta oil industry. So now you got the Canadian perspective, the American perspective, the European perspective, the Russian perspective. Dude. So yeah, so that's helpful. That's a little bit of alpha. Cool. This needs to be better organized, doesn't it? Yeah. I'll get it. I'll get it. Just looking at this. It, well, at least it's alphabetical guess. I think well, but it is, but it isn't, isn't it? It is, but it isn't. So VIX is down here, XRP is down there, but silver. So it is actually translating this from XAG, isn't it? Yeah. So it thinks it's XAG, but I told it don't use. So that's interesting. Dow is down here, which is kind of funny. NASI's down here, but I thought NASI was up there. Yeah. 3-month yield. Yeah. Government bonds, S&P 500, 2 Solanas, Kiwi, Kiwi, Kiwi. NASDAQ again. Okay, this might be a problem, right? Yeah, I'll have to clean this up. And what I'm getting at is there WTI. Look at this. ETH and Ether, right? And then ETH dollar. Okay, so I got to clean this up. And Dow again. Okay, this might have problems. All right, but what I'm looking for is oil. Is it U.S. oil? Is it WTI? Is it WTI dollar? So I got to get oil there. This needs some focus, obviously. What else did we see? I mean, you can organize this now if Greg says, I watch news from other countries, and I think you are not that aware of what's going on there. No, I'm not disagreeing with that. What I'm talking about, Greg, is we need to be able to make money trading and investing. And I do watch TV from all over the world. Now, I'm not putting that kind of time in now. I'm putting my focus in other things. So I'm not saying there isn't a shortage. I'm not saying there isn't lines. I'm not, but those are different things from global trading. So if you have lines for gasoline in Southern California, I'm sorry to hear that. Some of it could be hoarding. Some of it could be fear. Some of it could be there's a shortage of gasoline because it's early in the season and there usually is a shortage. And ramping up gasoline production starts now. So if there wasn't hoarding, you would be fine. What I'm trying to say is not that it doesn't negatively impact society or that you're not facing lines at the gas pump. What I'm saying is it's not necessarily actually what you're facing, actually the war in Iran. If people are panicking and hoarding, then they're panicking and hoarding, thus creating a shortage. But there's a normal level, in theory, for the United States, a normal level of gasoline for this time of year, which is usually near a low point. And then normally we start producing gasoline and we start increasing supplies. That would be normal. So we have a normal level. And then normally the oil refinery in Northern California would just, as they normally do, acquire crude and start making gasoline and eventually send it down to Southern California. Sweet. That's not happening now because they shut it down. So now you got to get gasoline from some other refinery, and they normally don't start making gasoline until actually this week. This is actually week number 1 of that process of making gasoline. So once again, this, right? They would have, if they, right, like there should be a normal amount of gasoline still, because it's not like you're getting gasoline from the Strait of Hormuz. No, you get none. None of it comes from the Strait of Hormuz. None. So hoarding, which is an increased demand over the normal level of supply, it is different. Yeah. And then Georgia in the United States and California in the United States have different gasoline prices. And I would imagine California will have extraordinarily higher gas prices than Georgia. But we have access to oil refineries that can make gasoline, and they send it to us in the normal distribution process. We're fine. I mean, you'll pay more because of the risk premium. Okay, that's fine. Georgia, we're getting rid of our gasoline tax, so we're going to drop it by 40 cents. Okay, but California's not going to do that. Maybe, I don't know. But you cut yourself off from gasoline. So now this is now a short. But that's Southern California, Northern California. That's not Georgia. That's not New York. That's not Oklahoma. Everyone else is going to have their local prices, and what they pay for nat gas and other forms of energy in Europe will be different as well. In that what we trade is really futures contracts or CFDs related to the hedging mechanism. You see? But I'm not saying you're wrong, and I'm not saying it's negative. I'm just saying it's not necessarily accurate, and what you see in Southern California is not going to be the same in, Bratislavia in Slovakia, or Prague in Czechia, Budapest in Hungary, Warsaw in Poland. London will have its prices, and Atlanta will have its own price. And we shouldn't oversimplify, because the highest prices will go to those countries that are most impacted. And Southern California gets zero energy through the Gulf of Hormuz, the Strait of Hormuz. None of it. It all goes to Asia. So it's a bank run. It's a hoarding scenario. And that will have negative consequences. Yes. Neato, huh? Neato. So what we want to do today is keep our eyes peeled and see how close we are to support, and start analyzing opportunities of up for today. If today turns out to be an up day because vol is down, okay, then we're probably going to bridge the distance here between, well, hopefully these moving averages, and we don't test the bottom of yesterday, but expand up towards the daily 21. We're right at the roll reversal. Okay. So there's your no diggity, no doubt. Now, if you remember the correlation coefficient that I showed you earlier, they're all roughly the same. Now, normally, if I was buying the good vol, meaning VIX down, so now because NASDAQ has the highest beta, then if VIX is down is good, then the goodest of these three would be NASDAQ. But remember, that's my general assumption, and TRADARS Analytics does these calculations of correlation coefficient of all our assets by analyzing the relationship between all assets relative to all assets over the last 30 days. And over the last 30 days, we've been facing mostly geopolitics, which means it's the same systemic risk. It's not individual companies in NASDAQ versus Dow versus S&P 500 or such, but instead all things. So they're highly correlated. And so they have about the same beta right now. But normally that would not be true. because NASDAQ is not the same as the Dow. Yeah. So anywho, you could, should I pick on Dow? I mean, we started there. And I prefer S&P 500 though, right? So there's a longer term view. And by the way, there's our target. We're not far off. Okay, there's our target. Do you remember? You remember? I'm interested in letting the S&P 500 fall to 6,200. And maybe if it occurred at the, between the third week of March, third week of April. Hopefully sooner than that, like third week of March, first or second week of April. You guys remember? I mean, we do this, right? We meet every day. And so it is down. Now, let me get rid of this. Okay. And then the next thing is if we get into that zone, like I said, somewhere before or after April 1st, then we're going to want to take this north. Now, you might say, well, all of this is related to the war with Iran, the excursion in Iran. Okay, that's true. Except we have this planned out before that. So a heck of a coincidence. Just like somewhere around now, I would expect a rally. How do I expect that? Well, again, we talked about this at TRADARS earlier today, but this idea of the business cycle, what impacts the business cycle, and how do you trade the business cycle relative to, short-term geopolitics, geopolitical risk, systemic risk. Well, in increments, right? So, well, we're at 66, and I still think there's a reasonable probability. I mean, anything's possible, but what's probable? There's difference, right? 62 still might be the number. I can't tell you if it's 62 or 58, or maybe somewhere in between 6. And you're like, well, Wayne, now you just, no. I'm not judged. This is the buy zone. That is the buy zone. Based on implied volatility, which was calculated by the analysis of this to this. Okay? And the analysis of this to this. The open, low, high, and close. It's weighted. So based on what we saw last year, the mathematical implied volatility is that 62 to 58, somewhere in there, based on what happened last year, is our buy zone for the year. This was done on December 31st last year. Months and months and months before the war on Iraq, or on Iran. Meanwhile, if this was true, then this is our plan for the year. And the very interesting thing about this is if you track things seasonally, which TRADARS does, obviously, we already have this all pre-drawn, what we would expect without without the war with Iran is this and this, generally speaking. There's some quirkiness to when and how, and really we have this somewhere else in TRADARS where it'll actually kind of look more like that. But it would be very interesting if somewhere around there, there's a resolution and an end to the conflict and it with Iran, and oil tankers start flowing freely. Right now it wouldn't really make that much of a difference globally because most places have oil and most places have hedged oil going out to the end of the year. I mean, this is why we have futures contracts. So most places are okay. There shouldn't be gasoline shortages. There shouldn't be right? Even if there is, there shouldn't be. And so at some point, the risk premium goes away. We're probably in the oil market paying, let's say, well, what are we now at? 88? It's probably worth 68 to 70. Okay. So we have this premium. So oil comes down, let's say, because the threat to supply goes away. And then if it occurred somewhere around here, that would give us a relief rally that, oh my God, oil's not going to be at $100. It's not going to be at 150. It's not going to be at 200. That was all fear. And we go back to normal. And instead, what happens is part of the peace with Iran is we allow them to sell oil. Remember, they've been sanctioned forever. So suddenly, Iranian oil comes on supply. And don't forget Venezuela. Eventually that Venezuelan oil comes into supply. Oil prices come down even more in general. Stock market goes up even more in general. Maybe that forces Putin to end his war. Of course, all he wants is the submarine bases. And, right, this is why we have this stalemate. You're like, well, why do we have a stalemate there? How come they're not attacking Kiev? They don't want Kiev. They want their nuclear submarine bases. I hope you know that. They have underwater caves dug into the mountains in that region of the Ukraine. So the Soviets were able to move in and out, move their nuclear submarines, and AKA their nuclear bombs, in and out of the region without surfacing. Well, they would surface inside the mountain, right? Yeah. And then they would load up with weapons and supplies and then go underwater inside the cave and then leave the region below surface without being seen by satellites. Well, guess what? Putin wants that back. Wouldn't you? You're like, really? You got an underground submarine layer? Yeah. Sharks with frickin' lasers. Yeah. So maybe, I don't know, if we solve that, Russian oil comes back online, globally, and just. That means this up, doesn't it? So right now, my mindset is not if I buy, not what price to buy. My only question is when to buy, and I'm in the window of I can possibly buy if I want to. We'll make this a window. Does that look like a window? Yeah. So I know the price zone. I know a general time. Okay. Richard Spencer says, so that's oil down like never before. Well, remember, it went negative. But no, but that's by design. Yeah. Yeah. That is by design. Okay. And so then what? The number one contributor to inflation in the United States is oil prices, because then that impacts gasoline prices, and gasoline prices impact everything. Okay. So we know that. So if you can get oil prices down, inflation drops. There, right? Therefore, GDP goes up. Meanwhile, with inflation low, the central bank cut interest rates low. So now money is available and money is cheap and the economy is booming. So now the economy will boom even more. Yes. And that would be by design. So let's just say, wouldn't it be a wonderful world if you had, uh, you know, 2.5 GDP, 2% CPI? Very, very possible. Very, very possible. Let's go to, we've been watching metals. Now, that doesn't look like a metal to me. All right. Goldilocks. Gold given back from the all-time high. So let's call this a fair market value. Yeah. 5-4, right? 5-4. We'll call it 5-4-3-2. So we're $1,000 off. It's not really fair market value. But actually, you know what I could do for fair market value? Insert trend, moving average, 200, 200 exponential. We're going to make it dark green, not teal, forest green, green, and fat. 200, no shift, exponential, green. Okay. Oh, that's interesting. That is actually the fair market value of gold in my using my definition. That's very interesting, and it held perfectly. Ho, ho, ho. So we're trapped between these two prices, basically, right? Interesting. So we had a touch there, and yesterday was up and today is up. So now we're caught between a rock and a hard place, right? Like this is a zero lag this way. So now this is the future fair market value based on a different calculation. And that's 5,000 on the nose. Shut the back door. That's crazy. So this is a zero lag. Sometimes it, right? A zero lag at 5. So rise up to 5. Ooh, that'll be interesting. And then what? Yeah, well, that's the thing. We don't know. We don't know. Yeah. Maybe governments will stop selling their gold to uh, to get money. That's what they're doing, right? Governments are selling gold to get money. Remember, when they buy gold, they give up their currency, right? Yeah. So if they're selling their gold, they're giving up the gold and getting their currency. The currency strengthens. The stronger currency offsets the inflation. And the inflation was created by the war. Aha! What do you think of that? Does that make sense? $10:30, we got that EIA coming out. No, it doesn't make sense. You're like, Wayne, I'm confused. Give me fuel, give me a fire. So now what? Well, you have to decide, are you a buyer of gold or not? Okay, you can connect not the dots, but the lines. Okay, this is where the orders were earlier today. Cool. Now what? We flushed them out. Now what? Up the rest of the day? Look at this. We had some profit taking. Remember this. This is drawn automatically. And on the first, right? On the first hour of prime time trading gold, the price collapsed. Okay, profit taking. Found support. Buyers are buying. Maybe it was that 200 EMA on the daily. Maybe. Not really, but maybe. And then what? Well, what about, don't think about today. I think this is where retail traders get kind of messed up. They're only thinking a couple of hours ahead. Well, think about a couple of days ahead. How about that? Where was the target on the daily? Somewhere around 5,000. Well, that's $450 above us. So are you putting together a strategy of waiting for gold to go bottom, 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 higher low, higher high, higher low, higher high, higher low? If I were me, I would suggest that to you. Is this how you're playing it? Are you looking for this in the future? Well, you have to be a bull. You have to know if that's what you want. Do you think it's going to 5,000-ish? Yes or no? Once you've made that decision, now it's just simply technical analysis. Can you spot support? Are you capable of, right, identifying support? And then higher highs and higher lows. That's what we're driving at. And if you're wrong and gold is going to drop 50 or $60 and maybe reset at 45, or maybe it's going all the way to 4,000, you're totally wrong. Well, you're not going to get this trade. And then you'll step back and you'll say, oh, well, maybe it was related to news, and maybe it was related to this, and oh, there's some more geopolitics, and okay, fine. But that's not what we have now. What are you trading now? Well, you have to answer that. What are you trading now? Wayne, I'm a bull. Cool. Or have you identified support? Yeah, we hit the daily 200 EMA and it held. Then we had a rally for 36 hours. Now we've faced a pullback at the US Open. We have a a triple bottom, a Cinco bottom. We have a Cinco bottom. As soon as I get a higher high, higher low, I'm going to ride it up to the daily 21 EMA. But since the daily 21A is severely lagged, I'm using a daily zero lag predictive EMA to help me guess where the 21 EMA will be in the future based on what is happening now. Thus, my theory is 45 is the bottom, 5, right? 50 is the target. 4,500 is the bottom, 5,000 is the target. We call that a strategic plan based on logic and intelligence. Is it correct? Well, it doesn't predict the future. How the heck would you know that? Huh? Do you remember Kathy Wood talking about Bitcoin going to $1 million? Did she tell you it was going to fall to 66 first? So I can't predict the future here, but we are looking at a lot of data set. And a lot of data set is saying, well, current market conditions, even though generally have been bad, today is currently pretty good. And if that continues, then based on what we've seen, gold would rise or continue to rise. And therefore, we are looking at this at 4,500 bucks, looking for a higher high, higher low. And life might get good and beautiful if we're able to spot price action that looks like higher highs and higher lows, because it is. Or it collapses and you didn't get the setup. Or you take a small loss because you took a shot, didn't work out, but you don't add to a loser. So, you take a slap in the face, but nobody broke your jaw. Nobody broke your nose. No, you were not stabbed in the heart. Cool. So that's how you line up strategy with tactics. Does anybody want this chart template? My scalper helper? Look at this move. Just beautiful, huh? There's that beautiful move. Okay. Is this what you're trying to do? Okay. Asia up. Asia fade. New York up. What do you think? Is that what you're trying to do? What do you want to do with your trade? I want to rock. Yeah. How about this, ladies and germs? Do, 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 do. So where's the next move? Up 500 bucks. Not all today. So is that what you're doing? Up 500 bucks? No answer? So it looks like most of you want to meet earlier in the day. And if we do that, guess what? We would meet this time of day. So we could always be ready, willing, and able to look at gold in the morning. I also like WTI that time of day. Yeah? Cool. Well, you guys are getting quiet on me, so maybe my microphone is broken or I've worn you out. So what I'll do is we'll end and I will see you tomorrow at a regular time, but